You are now rejoining the main conference.
Thank you, Yashasri. Welcome everyone and thank you for joining this Q2 FY24 earnings conference call of Zen Technologies Limited. The results and investor updates have been emailed to you and are also available on the stock exchanges. In case anyone does not have a copy of the same, please do write to us and we'll be happy to send it over to you. We'll be starting the call with a brief overview of the performance, which will be followed by the Q&A session. As a disclaimer, I'd like to remind you all that everything said in this call reflecting any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainty that the company faces. These risks and uncertainties are included but not limited to what we've mentioned in our annual reports, which you'll find on our company website. With that said, I'll now hand over the call to Tina Virmani from Motilal Oswal. Over to you, Tina.
Thank you, Abhishek. Very good evening, everyone. Today we have with us the management of Zen Technologies to discuss their second quarter performance. From the management, we have with us today Mr. Ashok Atluri, Chairman and Managing Director, Mr. Afzal Malkani, CFO, and Mr. Shilpa Chaudhary, Full-Time Director. Without taking much time, I would now like to hand over the call to the management for their opening remarks, after which we can start the session for Q&A. Thank you, and over to you, sir.
Thank you, Tina. Appreciate the introduction. And thank you so much, all the shareholders and team members who are there on this call. The second quarter results are out, and we think we are on target to hit our target during this year, and that's between 450 to 500 crores, and rest of the order book position we expect to be executed, the equipment order book to be executed in the next financial year. So we think it's a very positive outlook from what we see, and if even in terms of exports also, the kind of environment that's outside of India is making everybody rethink the training that they have done. When the world's most successful country, most secure country is not able to protect its border, where are we standing? So that's the kind of worry that other countries are having. And, so getting trained is becoming a top priority for the other countries also. So both domestically, we see the focus on defense, and internationally, there's a lot of focus on defense. So given these two things, we think we are poised to get more orders, and the order book position will further improve dramatically in the next few quarters. So with that, I'm ready to take the question and answers. And Afzal, would you like to add something, or shall we go to the question and answers?
Yeah. So we can move to question and answer directly. Yeah.
Okay,
that is fine.
Let's go ahead. Yeah.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the raise hand icon available on your toolbar or on the Q&A tab available on your screen. You may also post your text questions on the Ask a Question tab available on your screen. Kindly turn on your mic when the operator announces your name. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a question from Bala Murali Krishna Jonalaga from Oman Investment Advisors.
Please go ahead. Hi, good evening, sir. So, congratulations on the great set of numbers, and we are on the target. And regarding this margin profile, I would like to know which one is better margin profile, which for like a simulators or anti-drone systems.
So in terms of simulators have definitely a better margin profile as of now, and anti-drone systems have a little lesser on. But again, on an average, depending on the kind of sales that we do, we expect that 35% EBITDA margins will be maintained and sustained over a long period of time, and so that will continue. So so there may be some variations in quarter on quarter, but on an average, we plan to do at least 35% EBITDA.
Thank you. Okay. That's very helpful, sir. And regarding this anti-drone systems, I'm aware of that we are outsourcing that, and that finally final integration is happening in our unit and we are supplying to customer. And what about the simulators? That is, those are manufactured in-house or that is also outsourced from the vendors?
No, Bala, as a, we don't, the whole of the value chain, we're starting from R&D engineering, all the up to after sales service is completely owned by us. But only thing in the manufacturing is deliberately outsourced because we have a lot of capable manufacturers around in Hyderabad and they have been in defense for, more than 3-4 decades also in some cases. So we use that capability to actually execute the orders and using their capability. So we are very strong in R&D, we are strong in engineering, and we, of course, we are, very strong in after sales, marketing, annual maintenance contracts and all that. So we would like to focus on what we really good at.
Yeah, that's helpful, sir. That's all from my side. All the best.
Thank you.
Thank you. We have our next question from Ajinkya Pawar, an individual investor. Please go ahead.
Good evening, sir. I have a very simple question that in last quarter, we saw a sales figure of nearly about 130 crores. And this now we are seeing a 50% drop in that thing. So I just want to know what are the different reasons that we are seeing a deep on quarter-on-quarter basis. Thank you, sir.
So Pawarji, what we have here is, we have predicted a sale of about 450 to, 500 crores over the whole year. So, and typically, normally a thing would be, let us divide 500 by 4 and 125 is expected. But our thing is not that. What happens is typically it is heavily loaded on the fourth quarter, number one. Number two, what has happened is the orders that we have started executing were supposed to start executing in the third quarter end, actually. So, but only into 4 months we have started executing the order. So the execution has started a little early. And we think that the execution will happen also very quickly. And we will be, but again, we expect the fourth quarter to be very heavy, like all other defense, all other government companies. So this division of by 4 will not work in the case of a company like Zen. Yeah, so that's my answer, please.
Mr. Pawar, are you?
Okay, thank you, sir. Thank you. That's all from my side.
Thank you. We have our next question from Jatin Jadhav from Sahasrar Capital. Please go ahead.
So am I audible?
Yes, please.
Yes, you are.
Yes. Thank you for taking the question. My first question is, what is the total order book size currently?
That's about 1,400 crores that we are given in the meeting. So that we stand by, which was given in the yeah.
Okay. And the second question, so what is the executable time frame for this entire order book?
So, as indicated in the press release, the total order book, if you remove the annual maintenance contract that is spread over the 5 years post-warranty period, you take only the equipment order, which is around 1,200 crores. We have to execute all of them before March of 25. So whatever we execute in the current year, out of the 1,200 crores, whatever we execute in the current next 2 quarters has to be deducted, and the rest will be expected to be executed in the year 24-25.
And so just a final question. I wanted to understand the export potential. For example, let's say there are many conflicts going on right now currently in the world, and new and newer, for example, Russia, Ukraine, new and newer soldiers have to be trained. So my question is, will the countries over there, do we need that the transfer of technology for you to build a particular simulator for any kind of equipment, or it's not necessary per se? Or is there a potential, interest also coming towards you for manufacturing simulators in different theaters of war all across the world?
So to your question, one is that, there is a tremendous demand for training now, the rather unfortunate in the Middle East, which has the Hamas attack on Israel and Israel's response has been very strong. But the point was, how did they miss such a big attack coming and response? So, when the people all over are wondering, if a country like such a strong company cannot defend its border, what will we do where the training levels are much lower than that? So the sense of preparedness, lack of preparedness is now pervasive, and that will definitely, we are getting inquiries based on that, where they are saying that can you build combat training centers for all. So that is one thing. To your second point, those people may have equipment that is different from what Zen has already developed. Can we make simulators for that? Our libraries, the underlying libraries are very, very generic, and any new simulator, while others may take as much as 3 years to develop, we feel very confident that within 6 to 12 months, we should have a very, very complex system may take 12 months. Otherwise, majority of the simulators can be developed within 6 months. And we can offer it to the end user, the simulators that they require.
Sorry, just a follow-up question. For example, have you recently manufactured a simulator for our MBTs in India? Let's say the Markova Mark IV also, if they wanted you to build a simulator, they'll have to transfer the entire know-how of that tank or just a certain aspects of it?
No. So, typically the cost of the tank may run into tens of crores, between 30 to 40 crores. The simulator cost is not anywhere near that. So, there is no, one thing is, the original components are not used here because they don't want the ruggedness, etc. And typically a simulator may be as low as 2.5 crores. So the technology transfer that we require is basically going and, seeing, absorbing. So there is no actual OEM technology that we need. For the training point of view, whatever is required to be simulated, we capture the information just by looking at the equipment. We don't need the innards of the thing because those libraries have been developed over a period of decades with us. They are there with us. So we don't need the OEM TOT as such, but we would definitely need the access to the equipment that they have.
Okay, correct. Thank you so much.
You're welcome.
Thank you. We have our next question from Manan Shah from Money B. Please go ahead.
Yeah, hi. Thank you for the opportunity. Am I audible?
Yes, please.
Yeah, congratulations on a good set of numbers. My question was for the contracts, orders that we won in terms of the anti-drone order of 160 crore that we won in July and the export order, which was a mix of training equipment as well as anti-drone system for 340 crores. These contracts don't include any AMC contracts. So any particular reason why we have not been able to win the AMC part of the business for these contracts, or they don't include AMC business?
Yeah, so the typically, because sometimes people feel that the order level will be very high, so they have to, in both the cases, the intention to place AMC post warranty is there with us. So they want to see system installed, and they want to after 2 years of warranty they want to place the AMC. So both the models are available where they place upfront the AMC with us, which is actually, it just looks good on the order book position, but the execution happens at the same time, whether they give the AMC after the warranty is expired or before. So in terms of its revenue recognition is the same in both the cases. So there is nothing to be, why they didn't give, there is no other reason than, normally they would give it after the warranty is expired normally. But some of them have been giving for a long time, along with the purchase order to us. So there is nothing of concern in this actually.
Understood. And generally the AMCs are for what duration? I mean, what is the typical size of these contracts in terms of duration?
So typical, the AMC duration may vary. They may be as little as, maybe 1 year to all the way up to 5 years. 5 years is the maximum we have got till now. So that is the variation depending on the customer's commitment. I mean, if they cannot commit 5 year time frame, they're especially police and paramilitary forces, they go for a year. But army and the armed forces, they go for 5 years or even more. We expect them to go for more as time passes.
Understood. My second question was on the cash that we hold. So these are largely the advances that we must have received against these orders?
Yeah, it includes advances that we have received, but also our internal accruals also.
Okay, understood. So what will be the capex outlay going forward?
The capex outlay, we think will mostly be in terms of the anti-drone systems and simulator R&D that we will be doing. And the second thing would be about, the physical infrastructure that we may have to create for mostly the post manufacturing activity or integration activity. So this is what we are expecting, and the figures we will be sharing with the pretty soon with the shareholders as we develop. But the capex in terms of plant and machinery is very negligible again, because we have a huge supply chain that's very reliable and able to execute the order. So plant and machinery capex is going to be very minimal.
Understood. Thank you. I'll get back in the queue for any further questions.
Thank you.
Thank you. We have a next question from Dipen Vakil from InCred Equities. Please go ahead.
Thank you, sir. Am I audible?
Yes.
Sir, so I was looking at your slide 7 of your presentation. Sir, you have mentioned that 540 crores worth of orders were there as on 1st July, and this quarter you have won new orders of around 924 crores. So how much would be executable in this year out of this 900 crores?
So, the total order book is around, for the equipment, is around 1,200 crores. Out of that, we will be executing around 300 crores, less than 300 crores during the year. And the rest of the, about 950 crores or 900 crores is expected to be executed by the next FY25.
Okay. Thank you so much, sir. So my second question is in the line of our exports, sir. So how do you see exports panning out? So do you think the split will continue to remain in the similar trajectory, or do you think the export orders to improve in FY24 or 25?
Based on the situation outside and feelers that we are getting, we think that while Indian orders are going to really explode in a positive sense for us, also expect the export market to really, it's actually getting primed for a huge influx of training equipment. And we think we'll benefit from exports also. I think the 50-50 break may be there, but if there is any skewness, it may be towards exports only. Exports may be much higher than domestic.
Okay. Sir, one last question, sir. You're looking for inorganic acquisition going ahead. So is it in the same anti-drone or say EMs, so anti-drone systems, or you want to expand your product portfolio?
No, we want to be so typically this whole thing is called electronic warfare. So we want to be restricted to electronic warfare and simulators, but simulation also in maybe in Air Force and Navy and all that. Again, the targets we are looking at both in the domestic and international. So inorganic acquisition will happen in these areas. But again, we have always said, unless we can absorb the technology and build the next generation of product, we don't want to get anything just for the sake of getting transfer and manufacturing it for somebody. So this absorption is very important for us. So we expect, so in these fields, in the field of simulation and electronic warfare, our capability to absorb is extraordinary. So we will try to stick to those areas only.
Got it, sir. Thank you so much for answering my question, sir.
Thank you so much, Dipen.
Thank you. We have a next question from Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, am I audible?
Yes, little low, but.
Okay, I'll try to speak a little louder. But basically, sir, the question I had is, you mentioned that you're expecting about 250-300 crores of execution in the remaining part of this year, and 900 to 950 crores in FY25. This is just of equipment. So if we add some AMC sales to that as well, are we expecting around 1,000 crore top line in FY25? Is that right?
Yeah, it could touch 1,000 crores. It could touch, yeah. Yes.
Okay, and can we expect this kind of momentum to continue in FY26, 27, or are we going to see bulk of execution happening in these
based on the pipeline that is building up, we expect growth rate to be sustained for the FY26 for sure.
Okay, understood. And so you've regularly given guidance of at least 35% EBITDA margin, but in H1 we had about 44% EBITDA margin, and you're expecting revenue to scale up in H2 versus H1, given that Q4 is where most of the revenue is loaded. Does that mean we expect much lower EBITDA margins in the second half of the year? Because it's 44% at H1, but guidance is about 35.
So the reason why we are, so the thing is, what we are saying is that we guarantee a minimum of 35% EBITDA, but given the uncertainty of the supply chain, all that, there is a possibility that the cost of materials may go up a bit. But I mean, we are a very friendly company. If there is something more than 35%, we would be very, very happy about it, and so will the shareholders.
Understood. So, what kind of gross margin can we expect on average? Earlier because you had a higher share of AMC, so it was above 80%, but now it's coming down to the low 70s. So, what is like a sort of steady state gross margin that we can expect? And also, in addition, part two of this question is what kind of steady state employee costs can we expect going forward? Is that going to be a standard percentage of revenue or more a standard growth rate that we can see of 10-15% or each year in employee costs? If you color on that, please.
The employee costs, we expect them to go up, but in terms of percentage, they will be much lower than what we have now. But the employee cost will go up, and we are actually, adapting the structure of the company to serve the market that we are in, and some changes are happening. But again, we think that it's completely, under control. But we are actually looking at talent at this point in time. And, Zen is a good brand name, and a lot of people are joining us at this point in time.
Right. And so just on the gross margin side of it as well?
So, yeah, gross margin, we expect them to, we have been having gross margin of around 65% in most of the cases. So we think those gross margins will continue as we go ahead also. So gross margins, I don't think there'll be much pressure on that, 65 to 70% kind of gross margins.
Okay, understood. Thank you so much for answering all the questions, and best of luck.
Thank you.
Thank you. We have our next question from Harsh N from Chris PMS. Please go ahead.
Congratulations on great set of numbers. Just wanted to understand, also in the previous quarter, we were projecting that we would end over 500 crores of revenue, and now, we are guiding for 450 plus. So are we expecting some delays which have come up in the last 3 months, because of which we are expecting lower top line? Because even if I add through, I think we would cross 450 already. This is the H1 we have, and if you're doing more 300 in H2. So just wanted to get some sense that you're being conservative in giving that guidance of 450, or you're expecting that some delays could be there.
Yeah, even the range still happens to be 450 to 500 crores, but we just gave the lower range or lower conservative figure in that. So with a bit of favorable circumstances, we may be crossing 450 crores. So it's just a conservative guidance. You're right about that.
Got it. Perfect. Thank you. And any risk do we foresee, apart from new wars, which might, if it turns up, any other risk?
No, if the wars don't happen, we don't see any risk. There are no risks at all. As of now, we see things are, they are available. Most of the things are easily available. So no stress, the supply chain as of now.
Got it. Perfect. Thank you so much. Best of luck.
Thank you. Thank you.
Thank you. We have our next question from Sanjay K, an individual investor. Please go ahead.
Hi, good evening, Mr. Yeah, can you hear me?
Yes, please go ahead.
Yeah, I can hear you. Go ahead.
Yeah, good evening, Mr. Alturi. And congratulations on great order book. So more higher revenue was expected in Q2. But yeah, as you mentioned that mostly the revenue is overloaded towards Q4. So my question is, in today's presentation, or it's mentioned there is H2 started a good note with the order for training simulators worth 84 crore. So is this something a new order, or which was already announced earlier, or is it a new order which is not announced earlier?
No. We announced it at around 100 crores. We announced it in the stock exchange. And this is without taxes, it comes to around this price. So that was including taxes. Because, we somehow, there was some issue where the customer said that whatever order we sign, that is including taxes, and you have to give the total number. So, we give including taxes when they give the press release so that the customer knows that we are giving the right figure. But when we actually account for in our order book, we remove the taxes and we take the net of the taxes. So the 84 crores was already told, and again, this was for a tank live simulation, and that's a huge market. And this is the first of the orders in that segment. We expect a lot of orders to come in this because the actual training on force and force training in live environment has become very important these days. So this is the first order that we got in that. We expect the market is very huge, not only domestically but internationally. So this is a big deal for Zen Technologies and its shareholders.
Oh, that's great. My second question is about in Q1, company has purchased, I think, around 139,000 shares through ESOP for ESOP perspective, I think, in Q1. And I think Q2 there was no such transaction. So are we expecting in remaining H2, is the company going to purchase any such shares for the ESOP perspective from the market?
So we have around 6 lakh shares already, 6.4 lakh shares I think we already purchased, and we have allocated around I think 3 lakh shares till now. So we still have a lot of shares in the company. So the budget allocated by the board is almost exhausted. I think there are a couple of lakhs left in that. So there will be no additional purchase, I think, as of now, because we have enough ESOPs in place. Because we didn't want to issue fresh shares, so we bought it from the market and we are giving them as ESOPs to the thing. So we still have about 3 lakh shares, and that's a lot of shares. As of now, we will not be buying because we don't have any need to buy shares.
Yeah, thank you. And my last question is about you mentioned that a lot of orders are expected in remaining H2. So are you saying that the more orders are going to come only in Q4, or it will be distributed from Q3 and Q4? Like how the
no, I think it will be towards Q4 and Q1. We expect in the next last quarter and the first quarter of the next year the orders to come through. Yeah.
Okay. All right. Thank you, and all the best.
Thank you, Sanjay. Thank you so much.
Thank you. We have our next question from Ajinkya Pawar, an individual investor. Please go ahead.
Hello, sir. I have a couple of questions. First one, you may call it as a stupid question, that we are seeing a recent war in Middle East. So as we know, China may take Taiwan in a couple of years, I guess. So can't we import all the chips that are required for the the order book that we have?
We are, that's the one risk that we perceive. And whenever we are getting a chance, we are pre-ordering them. And, that's the reason I think there will be some load on the inventory. So we want to eliminate that risk of product not being available. But, anyway, so first we need to actually finalize the BOM. Once we finalize the BOM, we do buy long lead and critical items. This is what we have been doing now for a long time. And, the thing is, but if it comes as soon as we get an order before we can buy the thing, that may create a problem. But otherwise, in a few months, the risk is completely mitigated. So we get the components much ahead of, which can be impacted by such wars or something.
Okay, sir. I just want a clarification that in regards to S2, can you tell me the rough figure that for how much of, for orders we are quoting, that, what orders we can expect?
No, I would not want to hazard a guess at this point in time, but we are bidding for something like, about 500 to 600 crores worth of orders. How much will we get? We really don't know. We'll have to wait and see.
Okay, sir. Okay, sir. Thank you, sir.
Thank you. We have a next question from Alisha Mahawla from Envision Capital. Please go ahead.
Hi, sir. Good evening. Am I audible?
Yes.
So my first question is that we shared slightly earlier in the call that we have an aspiration to reach 1,000 crores of revenue by next year based on the order book that we already have. is there any capex that we will need to achieve this revenue?
No, for the manufacturing part of it, it will be very minimal, maybe about a 10 to 20 crores kind of thing. That too for building the physical infrastructure and maybe building some kind of jigs and fixtures to monitor the quality that's getting from the supply chain. But the capex requirement will be very minimal in this. There is hardly anything worth writing about.
Okay. And we were also mentioning that we are evaluating inorganic opportunities. Are we looking at freezing on anything this year?
No, may not happen this year, but if something happens, it's very good news for all of us. We will be very careful about spending the money. So very, the sense of trustworthiness is there. So, but it may happen, may not happen. We're not very sure about it. But at this point in time, we are evaluating various options.
And are we looking only at domestic opportunities, or we will be comfortable evaluating something that may be?
No, we are looking at international, mostly international. We are looking at international also, but domestic also, yeah.
Sure. And my last question is there any scope to improve our working capital cycle? What is it currently, and is there scope to improve it?
Yeah, I would leave the scope to improve is always there, Alisha. Completely agree. But I would ask CFO to put in some word about this improvement of the cycle. What can we do?
Yeah, sure. So on the working capital front, we can say that there is a significant improvement in our working capital cycle. If you see, our working capital cycle have improved from 225 days in March 2022 to 128 days in September 2023. So it has improved from 225 days to 128 days. And particularly our inventory days have reduced from 91 days in March 22 to 42 days in September 2023. And our receivable have also reduced from 150 days to 96 days. Significant improvement.
So we're expecting that working capital can stay at this 120, 130 day cycle?
Yes, it will be in the range of 120 to 140 days.
And now that we have a very large export order where there will be slightly longer lead times and payment times, are we still comfortable maintaining our working capital cycle in this band?
Yes, because generally we are getting also 30% advance for the export orders also. So we are very comfortable, no issue.
Okay, that's great. All the best. I'll come back in the queue. Thank you.
Thank you.
Thank you. We have our next question from Lavnish Mohan from ZAR Capital. Please go ahead. Lavnish Mohan, can you please turn on your mic and proceed with your question? Since there is no response, we'll move on to the next question from Maruti Nandan Sarda, an individual investor. Please go ahead.
Hi, sir. Good evening, and congratulations on good set of numbers. My first question is around the competition. So, do you see any competition in India or abroad who are doing the similar work on simulators as well as anti-drone?
Yeah, there are companies that work on simulators, and we have been competing with them for the past 3 decades. But the only thing we feel is that, very few companies are actually getting their own technology and coming here because it requires a lot of investment, a lot of R&D. So they're trying to join forces with some foreign company and coming here. But given the country's MOD's new policy of IDDM, the IP proving is becoming a big challenge for people who are trying to push some boxes here. So whether it is anti-drone system or simulators. So, so I think that we have good in terms of, because the IDDM policy, in which we played a big role. But but we do expect competition to keep coming. Even though in most of the cases, in this case, we were the resultant single vendor. There was nobody else who could satisfy the requirements of the government. And again, that is because largely due to the extensive R&D that we have done in the last 3 decades. So yes, we expect competition to come up, but as of now, we have not seen anything which is bringing up, actually competition ups our game also. So we look forward to that in a way, that even though we keep pushing, as of now, we are our own competition and we keep seeing that we are better than yesterday all the time.
Okay, my second question is around long-term vision. How do you see 5 years down the line in terms of top line? Can we make this a maybe 8,000 crore company in terms of top line?
Yeah, I mean, I think if we do, I mean, if we do only 5,000 crore, I would be disappointed 5 years from now. It should be much higher than that. I can say that.
Okay, that augurs well for the investor. Thank you, sir, and all the best for future. Thank you.
Thank you, Maruti. Thank you so much. I appreciate it.
Thank you. We have our next question from Neha Jain from Bajaj Finserv AMC. Please go ahead. Ms. Neha Jain, can you please turn on your microphone and go ahead with your question?
Hi, am I audible?
Yes.
Yeah. Hi, sir. Good evening. There's one thing which I wanted to understand from you. We noticed that the earlier presentations mentioned Zen Technology as a leading global defense training and anti-drone solution provider, to the current presentation which says a line saying India's leading anti-drone technologies and defense training solutions. So is this to be read as a change in probably the company's focus, and if so, how would it affect our margins?
So, so I wish I was writing all those things, then I would keep correcting it. But yeah, but nice catch. But the reality is that globally, in terms of simulators, we're absolutely, on the top. I think we may be in 1 or 2 position, all the 42 simulators that we have. There's no doubt about that. And most of the places we will be one. And in some cases, there may not be any competitor for the solutions that we are offering. So the global leader in simulator solutions, there is no doubt. But as far as ADS is concerned, we are actually playing, we just started in 2018 and we are just about, the first product came in 2021 and we are just trying to become a globally relevant player in that. As of now, the product that we are offering to the Indian government is very good. And that's why based on that, we are getting a lot of export inquiries. And we think that there will be tremendous amount of sale in anti-drone systems also. But are we globally number 1 in that? No, we are not globally number 1 or even 2 perhaps. But we are definitely aiming to become a globally, a dominant player or important player.
Thank you, sir. So my follow-up question on that would be, sir, when we say India's leading anti-drone technology, have we done any market size opportunity study recently which helps us understand like what would be the potential size, or because I understand, I mean, even when we happen to do a demo version of the products which are offered by Zen, we saw that a lot of it is very much which is catered as per the need basis. So when we say leading anti-drone solution, is this like a particular niche sector product, or it talks about the entire market in which we are the leading suppliers right now?
So we have a specific segment niche in which we play. We don't do handheld. There are some people who just create a handheld and point at a thing and get it down. So they are very, very low end solutions. We go a little higher, our range would start around 5 to 10 crores kind of thing. And, it would be 10 kilometers plus or minus 10 kilometers, ability to detect a mini drone, nano drone. So these are the kind of things that we are looking at. And in this segment, definitely Zen is the leading player at this point in time. Again, with caveats in place, we do expect competition to come in. But again, will they be able to prove that it's an indigenously designed and developed product? It will be a challenge for anybody. So we think that we are in a very good space, but we expect competition to come. But how will they really that it's indigenously developed? Because it has taken us a lot of a time to develop this product and a hell lot of an expertise. So we think we are in a very good position as long as the government is focused on, encouraging the indigenous products. And again, we have also bid against the world's top products. But in terms of price, I think they'll be much, much expensive than what we are offering.
Understood. So if I may ask another question.
Go ahead, Neha, please.
Yeah. Sir, in terms of export opportunity specifically, we understand that would be something which is going to be a major factor going ahead. So any countries where we have specific priorities in terms of these are the countries which we would be targeting, And if so, whom do you think would be, I mean, how does this, if you can just help us understand a little background on like how does the tendering, whether it is on tender based or how do we exactly go on to target these particular orders? Like, would it be again supplying to governments of different countries, or anything if you could share on those part to have some clarity on export segment?
So export segment, typically, we go for exports, we take support from the Indian government a lot, in the sense the local embassy, etc. And we also depend on some kind of a local strong partner. So this, and of course, they should be a friendly nation for India. So these are the three criteria that we have. And now we are getting tremendous amount of support from from government of India, where we say, please find out whether the requirement is there or not. So Indian government is actually helping us find customers at this point in time. In line with Mr. Modi's ambitious target of $5 billion export, we are getting, at the ground level, it is happening. So we think that because of, and again, stature of India in the foreign, in the world today is a different stature. Earlier when we they used to laugh, India is the largest importer. What are you saying that you will sell something to us? But now that is no longer the case. We are respected. We are taking, with seriously, and we are winning and we are winning. So I think this is the way it is going to be, and India will become a major player. Is already be on the way to becoming a major export hub for defense equipment.
Neha, thank you. We have a next question from Saksham Shrimal from Chris Portfolio. Please go ahead.
Yeah, hi sir, am I audible?
Yes.
Yeah, sir, wanted to understand the revenue recognition that happens. Pardon me if this is very basic, because I understand we have grown year-on-year basis, but Q-on-Q there is a dip. Wanted to understand, was there any execution delays or something like that, or how do we read that?
These are the orders that we got as late as, March end and June, July kind of orders. So they have started the execution in second quarter onwards. But yeah, there is no, there was no actually a delay. Even though, production gives aggressive targets, we do the buffering and come with the realistic targets. And this is happening as per the internal projection that we are. So there is no, there is no cause of worry. And this is, again, please don't expect that, when we say 500 crore, all the quarters will be 125, 130 crores kind of thing. And typically in government-oriented companies like Zen, the fourth quarter is typically very heavy. So, we think that may happen in this year also.
Okay, got it. So probably it is more of an annual thing that we should be focusing on and not quarter by quarter, because quarter on quarter can be lumpy in this.
I would say, I would very strongly recommend for most of the defense companies, the quarter on quarter can be pretty uneven. Just focus on year. I think that is where the key thing is.
Okay, thank you so much, sir. Thank you so much. Yeah. And congrats on a great session.
Thank you.
Thank you so much.
We have our next question from Rajesh Gupta from SBI Securities. Please go ahead. Mr. Rajesh Gupta, can you please turn on your audio? Since there is no response, we'll move on to the next question from Mayur Patwa, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So my question is, once the product is sold, what is the lifespan of that product and how much AMC revenue do we generate on that?
So Mayur, typically the product life cycle is 10 years. And in very rare cases, it has been 15 years also. And a typical warranty period is given for 2 years. It may go to 3 years also. But after 2 years, for the rest of the 8 years, we get the AMC. So that is what the AMC count is like.
Okay, and how much is the AMC revenue?
So it may be between 8 to 10% kind of thing. So let us take an average of 9% also. 9 into 8 years, put 72% of the equipment cost.
Okay, and is it same for both the products, like for anti-drone as well as for the simulators, or they are different?
Yeah, it is almost like that. Around 10%. The anti-drone system may be a little higher because of the complexity, but because we haven't started the AMC for them, we have indicated that it is going to be at least 10% to most of our customers.
Okay. And going forward, maybe 2 or 3 years down the line, once we stabilize our anti-drone system products and everything, what type of revenue mix we are looking at? Will it be 50-50 or we are more focused on anti-drone, or how exactly it will be?
So we are looking, I mean, the thing is, it's not that we would love to have, any combination as long as, it is higher at a higher rate. If 50% of ADS is, let us say, 1,000 crores, and, and so we are not really focusing on the percentage. We are going after orders in any form they come. The simulator order, we take the simulator order. So we don't have a vision as to it should be 50-50 or not. Our thing will be more responding to the customer requirement. If they want 70% simulator, 30% ADS, that is also okay. But very frankly, both of them to explode, and the simulator and the way the government has introduced in the 2021 September, they introduced the framework, the way they are implementing now, and the recent statement by Chief of Army Staff, where he clearly said that, we are started acquiring simulators, and this has just started. So which is a big thing for us, which is the ultimate confirmation from the government of India. So now so they are accelerating procurement of simulators. So we think that both of them will be growing, but very, very hard. And again, we are very responding to the customer's needs. So we expect both of them to explode, but in absolute terms, they may go very, very high.
Okay. And last question is there any capacity constraint? I understand these are all software, so ideally we should not have any capacity constraints, right? Or do we have any capacity limitation? How much we can reach?
So the thing is that there is hardware involved in this. So the simulators, if you look at it, there is hardware involved in it. So hardware is maybe about, depending on the kind of thing, it may go up to 30% of the total order cost. Maybe sometimes even 10%, 15% also. There are cases. But the point here is that yes, there is hardware, and but I don't feel that will be a constraint when we actually try to scale up. Again, the majority part, the 75%, is software, as you very rightly observed. So the constraint, we don't feel any hardware constraint will actually punish us for not taking more orders, or it will restrain us from taking more orders.
Okay. And this hardware then we manufacture in-house, so it is procured from outside then?
So we actually, what we do is we do the prototyping, R&D and engineering in the company. Once the product is engineered for manufacturing, then we outsource it for manufacturing to our supply chain.
Okay. And the last one now, the profit margins are more or less same for both these divisions, right?
So actually the simulators are little higher, profits are there, and anti-drone systems are little lower than simulators. Yeah.
How much it can be, the EBITDA one?
So EBITDA, I would say that perhaps the simulators may be about 40% plus, and this may be around 30% or little around that. ADS would be around 30%.
Okay, great. Thank you very much. That's it from my side. Thanks.
Okay, thank you.
Thank you. We have our next question from Mudit Kabra from Elara Capital. Please go ahead.
Thank you for the opportunity, and congratulations to the management on big order wins in the last 4 months. Can you give us the order book split between the simulator and ADS?
Afzal, go ahead. Afzal, give the breakup.
Yeah, sure. So if we give the breakup of the simulators and anti-drone system, total order book position is 1,403 crores, out of which anti-drone system order is around 597 crores. Simulators order book is 546 crores, and remaining 259 crores for the AMC.
All right, thank you. And also, can we have order book split like in different applications? For example, arms and ammunition is how much, and for tanks it is how much for simulators?
No, that we don't have.
Yeah, that we cannot share, but overall we can share with you.
Okay. And lastly, just I wanted to make us get some sense on export orders. Wouldn't our simulator or export orders be restricted to countries which are using only Indian-made products or platforms? Or is it also fair to assume that our simulators can be procured by countries which are using their own tech and own products, and they're okay with sharing those kind of techs with us?
Most of the platforms that we currently have are basically mostly foreign country platforms, Russian or American or other countries. So the platforms are not completely Indian in that sense. But so the ones we make are, they have a lot of market overseas also. A lot of countries have Russian, erstwhile USSR equipment with them. So they are ready-made customers. But even for other customers who have different kind of training equipment, we have the libraries, we have the capability to redesign, to design and manufacture the replica of other weapons also. But the underlying software requires very little tweaking, so which is the difficult part. It's already developed and can be readily absorbed in the software, in the new simulator that we need. So to your question, it's much, the current India equipment is world over. They have procured from France, from America, from Russia, everywhere. So that there's a huge base for that. Second is, yes, we can, for new customers, we can develop it very fast.
All right. Thank you, sir.
Yeah. Thank you.
Thank you. We have our next question from Dipen Vakil from InCred Equities. Please go ahead.
Thank you so much, sir, for the follow-up. Sir, just one question. So you mentioned that there are no supply chain issues going on right now, but I wanted to understand for the things that we manufacture, what would be the import and domestic procurement split between the two? And what components do we procure as imports and from which geographies?
Yeah, typically we have been, the import content, I think is maybe, depending on the kind of product, it may go as high as 10%. That is the maximum we would be doing it. But typically, 5% would be in simulators. It would be between 3 to 5%. So that is the thing. And this is spread across. We take it from Europe, we take it from America, we take it from even from, Taiwan, etc. So these are the places where we take it.
So majorly any particular component that we recurringly import?
Yeah, so we do import recurringly, but very well-known brands, like Texas Instruments, those kind of things we do import on a regular basis.
Okay, got it. Thank you so much, sir.
Thank you. We have few text questions. I'll read it out to you. We have a question from Rajesh Gupta from SBI Securities. Any reason behind spike in other expenses? What is overall execution time for rupees 1400 crore in hand?
So for the spike, I'll let Afzal speak, but overall the execution, we have said that if you take out the annual maintenance contracts, the rest of the equipment we expect to be executed by FY25. Afzal, over to you. Over the I don't know which expense you're thinking about. There is a spike, but
Yeah. So there are only employee benefit expense that we discuss, and other than this, I think there is only other expense in the balance sheet, right? So if I assume that there are only major expenses, other expense, and there is a spike in this other expense, so I understand that Rajesh Gupta would like to know about increase in other expense. Here in this other expense, the major expense is related to marketing expense, which is variable in nature. So compared to September 2022, there is an increase of around 300% in the revenue. So in line with increase in the revenue, our other expense, particularly marketing expense, have increased by 300%. So this is the main reason for that.
Thank you. I'll read out the next text question from Lavnish Mohan from Zar Capital. 1. What is the logic for opening an office in Armenia? For export opportunities, I would have expected to open an office in Dubai, which is a business hub in Middle East.
yeah, so the reason we are opening in Armenia is that, we expect a lot of business in the CIS. So 3 regions we focus on. One is Middle East, Africa, and CIS countries. So we needed a CIS support. Is mostly for supporting the marketing and sales activities. So that is the reason we are focusing on Armenia also as a hub for all the CIS countries. So that is the reason. And probably we'll have one in Dubai. Of course, we are very active in Dubai at this point in time. You're absolutely right. for Africa and Middle East. This, the real commercial hub is that way. We are active. We are active in Dubai, and but in the long term, we think Saudi is a very better, is a good bet for Middle East and Middle East operations, and of course Africa. We are very active as of now. Thank you so much for the question.
Thank you. We have a question from Kripa Shankar Maurya from Choice Broking. Hi, sir. One question on order book. Just wanted to understand the orders in pipeline and by when we can expect those order, and on anti-drone, what is current order book, inquiry momentum, and in terms of technology, how we are scaling up the anti-drone technology.
So one that we said there are about 500 to 600 crores worth of pipeline is there till FY25. So those things will be resolved then. But for 6 and 27, it's a very huge pipeline that is developing. As of now, it's not yet completely crystallized. And with respect to ADS, we are absolutely aiming at becoming a globally important player in this segment. So the R&D is being spent like we are not sparing any effort and any expense to become a globally important player in that segment. So yes, as you keep moving ahead, you will hear more and more about the new features that we are adding on a regular basis on the products. Thank you so much.
Thank you. We have a live question from Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Thank you for the opportunity again. Just one bookkeeping question. What is our tax rate? Because for H1 it has been closer to 30%. Last year it was 25%. Just wanted to know what it will be. Thank you.
Yeah, Afzal, please go ahead.
Yeah. Tax rate is effectively 29.12%.
Okay, thank you.
Thank you. We have our next question from Rajit Agarwal, an individual investor. Please go ahead.
Good evening, sir. Just a couple of questions. One is related to the agreements or the contracts, the orders that you receive, specifically the export orders. What kind of agreements do you sign when those contracts? Are these orders cancelable? Is there a penalty clause in these orders? Just want to understand the surety of these orders panning out over the next 12 to 18 months.
So, the thing is, in the particular order case, we have got 30% advance from them, and we are in a continuous touch with them. They are coming and giving us feedback on we have started making the first half production models also. They are seeing, and we expect the execution to happen before FY25. All the export order will be executed, and there is no frivolous clause like where they can just cancel the order or anything like that. There is no clause like that. So if we execute, if we make the product, we can deliver and take the money, rest of the money. Yeah. Rajat?
Mr.
Right,
Agarwal?
understood. Is there a currency protection clause also? As in, are these in USD? Is the currency? Are we protected on the currency front?
So they are in USD. They are in USD. So they are in USD. We do the incoming. We don't hedge them or we do any foreign currency operations on our thing. We when the money comes, we get the money, but no aggressive profit taking on this or something like that.
No, what I meant is if let's say 2 quarters down the line, the dollar rupee goes down to 40, that is the rate that we will receive our incomings at, right?
Yes. Yeah, that is right. We will receive 40. Yes.
All right, sir. And just the last question. Since we are, at the end of October, would it be possible for you to share the approximate sales that might be booked in the month of October?
No, I can't.
Okay, I just had to try. Thank you. Thanks a lot. Thanks a lot, and wish you all a very happy Diwali. Thank you.
Happy Diwali to you too, Rajat. Thank you so much.
Thank you. We have a text question from Sanika Khemani from Sapphire Capital. Hello, sir. We have said that the growth rate for FY24, FY25 is sustainable for FY26. The top line for FY25 comes out to be 1,000 crore and FY24 is 450 crore, which means the revenue is doubling. So am I correct when I assume this growth rate for FY26?
I would say that in absolute, not in percentage terms, but in terms of, 500,000, 1,000 to 1,500 crores be possible. That looks a reasonable estimate that we could be easily talking 1,500 crores in FY26. Yeah, based on the strength of the thing that we are getting now. But, till we actually get the orders in hand, we're not able to really tell that. But 1,500 crores looks like a safe prediction, very safe prediction.
Thank you. We have a text question again from Vignesh Iyer from Sequent Investments. Lot of companies who have high marketing expenses or R&D show it as a new line under other expenses category. This gives clarity to investors where the major spending has been under other expense. Would request the management to consider the same and show line item under marketing expense under other expense.
If I understood the question right, what they're saying is that new product development needs to be highlighted. This can be done. I think it's not very challenging. But just to go back to the very basis of R&D expenditure that we do, in terms of treating that, we write it off in the period it has occurred. So there is no capitalizing that is happening. And so it is a, that's a very conservative way of doing, almost saying that, we are not sure of any R&D effort coming to commercial solution for certain. So the India standard says that if you are doubtful, you have to write it off in the same year. So we follow that principle that, any technology that we are developing may or may not succeed, even though the percentage is there. But they say if in doubt, write on the same quarter. So that's what we do. We write it off on the same quarter. But to your suggestion that, we should actually maybe show it as separately that we are doing it for the new product, for the new market, etc. separately. I think we'll consider this. It's a nice suggestion, actually. Probably we'll consider that. That also shows how much we are spending on the future. Probably we'll do that separately also. Yeah. Thank you.
Thank you. We have a text question from Girish Gupta, CA Girish Gupta. Sir, this is Girish Gupta. I think we change our orbit. Please explain or confirm.
Yes, I confirm. I mean, we have changed our orbit already, and we expect another orbital shift in maybe a year from now. So yes, it's been again, frankly, this is more external environment that has changed than in just adapting to what is happening externally. But then has already been R&D company, always been focusing on IDDM. These were never honored or treated well or really appreciated. Now in this environment, they are being appreciated. They say people who do R&D are special. We have a special category from IDDM versus people who just come and resell, pimping other foreign vendors. They are showing the difference. So, I think this is a good environment to be in. So this is because of this environment, we have definitely shifted and, as you said, probably orbit also. And we expect one more shift to happen maybe some time from now.
Thank you, sir. I now hand the conference over
we
to
can conclude. Yeah. Okay. Thank you.
Yes.
We are doing the same thing. Okay.
Yes. I now hand the conference over to Ms. Tina Virmani for closing comments. Over to you, ma'am.
Thank you, sir, for giving us an opportunity to host you and for your detailed responses for all the questions that came through. Would you like to make any closing remarks?
So again, the caveats that Abhishek gave, those caveats, forward-looking statement, we think that we are extremely well placed. The government is really in the direction of, encouraging IDDM companies that own IP. And suddenly after the recent events in Ukraine, where Ukraine has the world's most advanced equipment, still they are not winning war, because they're not trained on the equipment. They have the equipment, but they're not trained. And again, the training has become very, very important. So has the, which leads to demand for our first vertical training and simulator. And second, the extensive use of drones in in the current wars that are going on also, bode well for anti-drone solutions. So I think we're placed at a very, very good location, and we expect the growth to continue in the next 3 to 4 years. We will be in a different league altogether. And thank you so much for joining this call. Thank you so much, guys.
Thank you, sir.
Thank you, sir. Thank you, participants.
On behalf of Zen Technologies Limited, that concludes this conference. Thank you for joining us, and you may now exit the meeting.
Thank you.
Ladies and gentlemen, good day and welcome to the Q2 FY24 earnings. Ladies and gentlemen, good day and welcome to the Q2 FY24 earnings conference call of Zen Tech. You may now exit the meeting.
Thank you.
Be in a different league altogether. And thank you so much for joining this call. Thank you so much, guys.
Thank you, sir.
Thank you, sir.